So welcome everybody to the Fraud Risk Governance webinar and why you shouldn't work without it. So we have attendees from across the globe, so very excited about this discussion today. So thank you everybody for joining us. One quick housekeeping note, we are going to hold the questions until the end of the presentation, but please use the Q&A button or chat button below and enter your questions, and we'll definitely leave a few minutes at the end to take those questions. So to help with the discussion today, happy to have Aaron Fry from Lucid Point Consulting join us. Lucid Point specializes in, fraud risk, AML risk, payment risk, and also offers third-party vendor management services. So really appreciate you being here today with us, Aaron.
Thank you, much appreciative.
I also have Vineet Mishra, who is our global CIO and chief of product and responsible for the Velocity Fin Crime Suite here at Alasa Group. And I'm Greg McWard, Director of Business Development, from the Alasa Group, as well. So what we want, some of the objectives we want out of today's call. We only have 30 minutes and there's a lot to cover. So we really had to try to narrow it down to some key items that we want to cover. So first, what we would like you to walk away from, what is fraud risk governance? What do we mean by that? And then why is it important to your organization? And then third, we'll address some of the challenges commonly faced. So that's what the objective of this webinar is, but probably a good question or a couple questions to ask is, why did we pick this topic? So when talking with Vineet and Aaron, one reason we thought this was a very timely topic is, back in 2021, FinCEN made fraud one of their national priorities. So we've seen the regulators being more focused on what an organization is doing around their fraud program. But what does that mean for you? So those familiar with AML and CFT and what FinCEN has defined for those programs, they've done really very little on the fraud side. So what does that mean to you? It really means that organizations are kind of left on their own to define what their risk governance program should look like, and why, we often see this step, overlooked. Now, the second reason, we picked this topic is really the timing. We know most of organizations are going into their budget season. Aaron and I both come from the banking background, and we understand it's always a challenge to get the resources you need. So we hope to give you a couple tidbits to walk away from this. So as you start your 2025 budget planning, you have some ideas of maybe get the resources you need going into 2025. So those are some of the reasons we thought this was a good topic to talk about this time of the year. So let's kind of switch. What do we mean by fraud risk governance as far as the context of today's discussion? First, it's the system of rules, practices, and processes, implemented by organizations to manage and mitigate fraud risk. Second, it's the policies and procedures to guide how your organization identifies, assesses, responds to, and monitors fraud risk exposure and losses. But a very critical component of any fraud risk governance must include the fraud vendor management component. And what we mean by this is how do you select and oversee the vendors that are involved in your organization's fraud strategy and operations. So that's kind of the context that we're going to use, today. We're probably going to take it a little slant towards the vendor management piece. But, in 30 minutes, we can't cover a full fraud governance or risk governance, program. So, but maybe I pause here. Aaron, I'm going to turn it over to you of maybe why fraud risk governance is so important to an organization. Oh, Aaron, you're on mute.
No, appreciate that. Appreciate it. So thank you.
You didn't want to share your secrets, did you?
No, of course not live, not at all. So overall, fraud risk governance, of course, is extremely important for any organization. And honestly, I feel like it's actually one of the most overlooked functions in the fraud risk programs. And then, of course, when it comes into the vendor management piece, specifically for the fraud solutions that are being utilized, Its importance is impeccable, mostly because it really touches your entire enterprise. When you're selecting a fraud vendor in your governance processes, you're going to understand that, of course, it's going to impact your first line of defense. So that's your fraud operations and your fraud analytics and strategy group. And most importantly, it's also going to touch your technology group. Somebody has to implement it. And when you have a solid understanding of the vendor management that you want to have, the onboarding processes, this makes it very seamless for your technology group to have a great process to onboard a vendor, putting it in their technical roadmaps to be able to implement them efficiently. Most importantly, I feel like as the business stakeholders, the ones that are always wanting to grow a business, but you want to make sure you have the right vendors selected to help them grow with integrity, is a key component as well from what a fraud vendor provides. Another key area, of course, is your procurement group. If you really understand the outcome and expectations of your fraud vendors, your procurement group is really going to be a fan of you. They'll be able to have the scope and understanding what is the risk of onboarding during the due diligence process, as well as the legal group to understand what's the timeliness and effectiveness for approving contracts. And then the final group, of course, that's very much impacted by your fraud vendor management is the finance group, whose cost centers being utilized, and the cost and budgets expectations. So understanding all how those components of your enterprise work for selecting fraud vendors, and the outcomes of them, and especially tailoring around your correct products, whether they're for our credit cards, debit cards, checks, ACH or wires. And fortunately, our partners here at Alistair Group have solutions for all of them. But again, that's why it's so important, because it touches the entire enterprise.
Thanks, Aaron. So why don't we talk about some of the challenges? So again, we only had 30 minutes, so we probably could have talked for hours on this, but also trying to respect, and everybody knows that their attention span can be measured in minutes. We're going to keep this very focused on three common challenges we see about trying to implement a fraud risk government, program. So the first challenge is, every organization's fraud program is structured differently, and there's really two key questions that you need to ask as you start defining your fraud and vendor risk governance program. The first is you have to be honest in how your fraud processes, are structured. And what we mean by that, are you decentralized? The typical siloed approach we still hear from organizations. Have you moved to a more centralized environment, maybe where all fraud is under a single management group? Or to take it a step further, have you moved to a FIU structure where you have both AML and fraud all under a single, department? So understanding that, again, is very critical on kind of how you define your fraud risk government, program. Now, second, and just as important, it's also to understand is where your organization's fraud, exposure is. And what we mean that by that is, if you're an FI that maybe banks along the border, your check fraud or cross-border remittances might be a very high, risk exposure, compared to maybe a commercial bank that's doing a lot of international, wires. Their fraud exposure is going to be completely different than your organization. And the other important thing, which is coming more and more common and more discussions we're having, are the banks that want to bank the fintechs and be the sponsor bank. So as you move into the fintech, you got to make sure part of your governance includes how does your risk exposure change by taking on fintech clients. It's very critical. And a lot of times there's misunderstanding on who owns that, fraud risk. So those are a couple of the key questions as far as, make sure you're honest on how your organization is structured, what your fraud exposure is, because it's very critical on defining not only your overall risk governance, but what vendors are the best fit for your organization. So the next area we see as a challenge is the changing technology and ineffective monitoring of management of contracted solutions. So we all understand that technology changes fast, but unfortunately, the criminals are changing just as fast. So the key question you need to ask kind of in this challenge is, how do you know, your fraud solutions are being, effective. And a good example is, maybe you put a check fraud solution in several years ago and it was doing an adequate job. But how is it doing with the explosion we're seeing in check fraud today? Is it still being as effective as you thought it was 3 years ago? Another good example is, how is your technology and your vendor solutions keeping up with current trends? What is it doing around instant payments? How is it handling Fed now? So again, it's very important you step back and say, how am I going to measure the effectiveness of my fraud solutions? Not only when you first buy them, but as things change over time. So it's another challenge we commonly see. Now, the last one is your organization incorrectly assessing the ROI of your fraud vendor's cost? So this kind of ties back to, as we opened, getting resources is always a challenge. So, we often see is how is an organization ensuring they're capturing all fraud related cost? This becomes more of a challenge, definitely, if you're decentralized. And how do you get all departments, to kind of follow the same practices to report the fraud? But there's also two key components you can't overlook. One is, are you accurately capturing all the fraud? We often see that maybe a fraud loss is going into a journal GL, write-off. So it kind of gets lost in the big picture and it's not accounted for. But just as importantly, which is often overlooked, is how are you measuring fraud prevented by current solutions? And it's a little bit more, difficult, but if you're stopping a lot of fraud with current solutions, that's a very critical component of your ROI and should be built in. Still, and I don't want to speak for Aaron, but we kind of talked about it. There's nothing worse than we still often hear from an executive saying we don't have any fraud. And as much as for everybody on this call, I wish that was true for every organization. When Aaron and I hear that, we always just say, that's a huge red flag. And that organization, you really need to step back and say, all right, am I really accounting for all my fraud? So those are some of the challenges we see. We know it's up for debate on what other challenges there are. But again, we only had 30 minutes, and I want to definitely turn it back over to Aaron to talk about how to address some of these challenges.
Absolutely. So to address these challenges in fraud risk governance, of course, additional key questions to ask. How does your organization look at specific requirements before selecting a third-party vendor? I've witnessed this from my experience directly in the industry and with current clients where you have a problem and you go to the market looking to see who can solve it. And a lot of vendors will say, yes, of course they can solve it, is their initial reaction. But also understanding is that if you don't have your requirements, you don't know if that yes is an immediate yes, or is it going to take longer to get to the true yes as the result. So understanding your requirements is just extremely important when you are trying to solve a problem by utilizing a third-party vendor. Also, do you actually understand what your existing exposure is? It's one thing to understand that you have a problem that you need solved, but also can you create the value and essentially the fraud risk exposure details could be communicated about here's how much exposure we have that will help sense urgency and prioritizations internally. Then also, how do you present the realistic ROI? And sometimes the ROI is not even just financial. It's going to be the time spent in different processes, especially as people are trying to get out of manual processes and you want things that are more automated. But you also got to understand there's an application management component of time as well with third-party vendors. So again, all the ROI is not just going to be monetary directly. You got to have the intangibles as well. And then, of course, what you can do to make sure you are headed the right direction is understanding your fraud risk appetite. I've seen fraud risk appetites from my industry experience as well as existing clients where some appetites are derived based on transaction volumes, where you have good transactions versus your actual fraudulent transactions. Others have used fraud risk appetites as a component, as a percentage of their net profits. Is that going to be truly measurable against the long term to understand how effective your fraud risk vendors and program really is if it's only against what the net profit is? I always recommend, in general, the fraud risk appetite should be a component or percentage of your credit losses or other types of operational losses. This way, you see the true integrity of your loss categories for fraud against other operational related functions. And of course, most importantly, is determining your continuity plan if you do exceed this tolerance level from your fraud risk appetite. Is it going to be directly related to the vendors potentially? Depends on how much of a deep dive you do on that. So understanding is what are next steps when you do cross that threshold, if you do. Hopefully you don't, but as we've seen in the world, fraud losses continue to increase across multiple industries. And so you got to have a plan in place to help mitigate it. And a big part of that mitigation is understanding the cost if you do need to fix the problem. And usually it's going to be either you're going to build something internally to assist in the remediation plan, or do you want to buy something out of the box from another third-party vendor potentially, or buy another solution to replace your existing vendor. All this understanding around your fraud vendor management is truly crucial to be able to tackle things in a timely manner, prioritizing and being very effective in your solutions.
Thanks, Aaron. So before we move into the Q&A, Vineet, do you just want to maybe talk a little bit about how Velocity can help organizations be a part of their fraud risk governance?
Definitely. Thanks, Greg, and thank you, Aaron. I think there was a lot of information. I hope that all of our audience are getting hang of it. Definitely, as you said, in all fraud programs, fraud governance is a lot of time is left out, and to have a right fraud program which covers an end-to-end fraud solution, it basically has to be included. Now, with that, as already said, we don't have the entire day here, so quickly, like how Velocity can manage it is, well, basically what we're doing is a lot of things we're using like technology driven, right? These days, technology is where we stand and we can solve things around. As Aaron mentioned, like, one of the part is, your vendor management and your selection of your right software solution too. So Velocity, we're basically working a lot towards now prevention. So we do like a hybrid fraud solution where you do have a real-time fraud monitoring with basically you can prevention. At the same time, we also have rules, and the other part where you can actually be like a peace of mind and have some rules to make sure that nothing is being missed out. But we still see the change in a lot of our customers that they're still trying to adopt. When it comes to the real time and you explain them the artificial intelligence and machine learning procedures, like it's hard for them to actually understand everything, and people are still scared to go into that mode where they think, oh, okay, everything will happen, on a normally basis, or everything will be picked up without we deciding and telling the rules, right? I hope Aaron can say, and he has been helping clients in setting up this type of software. So with Velocity, we're moving towards prevention. Prevention is what you're looking directly, like we can definitely help, but we got the hybrid solution with rules as well. Another thing we have worked is, I think, is a major challenge is going on between a lot of clients who are working with MSPs and basically in the BaaS environment, where what you're doing is you're basically working with multiple different MSPs, whereas an MSP customer can have, one MSP customer can be into another MSP services as well, and in the same way. So it's hard for you to uniquely identify, the entities in between. So we're basically done some sort of a linkage analysis where you're basically able to view a holistic customer scenarios and a linkage across and in between those different clients and customer. And apart from that, a lot of like the dashboard, as we were talking about, one of the things, Greg mentioned in the beginning, like how are you able to make sure when you are doing the prevention, like, how much money are you saving, right? What's your ROI has been from your solution, right? That's one thing we built into our real-time solution, that it shows you on real-time basis if an alert was fired in the real time, and it turned out to be a potential fraud, which you call it as a true positive. It starts basically tracking down all those dollar money, and it starts showing you like month by month the dollars being saved, and particularly landing up into an yearly ROI, which basically shows you that, oh yeah, the money you paid for your software, money you paid for people putting in such type of a program, it's already being paid off. With that, I'll hand over it to Aaron and ask his input on how he suggests Lucid Point stands in fighting the fight and protecting our customers.
No, thank you. And so one of the best things that we're doing here at Lucid Point, and we're doing a big push for this with clients, is just proactive reviews of your fraud risk function. I know that budget and resources always seem to be tight, but able to find that priority to plan to execute on being proactive. As we all know, proactive is the best practice, but it's not always practiced. So being able to say, hey, let's set some budget aside to have somebody come in like Lucid Point to review our program, help us identify existing gaps that we might not be aware of that aren't documented, with the recommendations to close them and could close them for you on your behalf, is a great recommendation, especially with the ever-changing fraud risk landscape. And then, of course, a deeper dive component of that is looking at your third-party vendors, helping you design and define what your return on investment really is from your existing tools. And that will help you determine, are you getting the best ROI? Do you need to replace this tool, or does it need to be enhanced? And again, these are two major items there we wanted to touch on today. Again, proactive fraud program reviews and making sure that your vendors are giving you the best ROI.
And just to add to the Aaron's point, when it comes to you assigning the budgets for a consultant like Lucid Point or a software product like Velocity, just so you know, and you can be sure we don't cost an arm and leg, and we're very, very affordable, and we work between client budgets. So that's just I wanted to put it out there, and sorry on behalf of you too.
Absolutely.
Thanks, Vineet. Thanks, Aaron. So we have a couple minutes for Q&A. I know we just opened the Q&A session. So if there's any questions out there, more than happy to address them.
We see one.
So here's one. So when determining fraud risk appetite, do you consider fraud basis points? Aaron, do you want to take that one?
Sure thing. Yes, and I do consider fraud basis points, but making sure that those are going to be tailored around your organization's product type in your overall portfolio. If one institution, if you look at the general fraud basis points, if one institution's portfolio was made up majority of commercial versus consumer, or a heavy mix of both, it's going to actually have a different weight out. So that's why when it comes to a fraud risk appetite, I don't like to use fraud basis points as just a generic standard of it, but it's really tailoring it around your institution's portfolio.
Thanks, Aaron. So we've got another one that what are the early warning signs that a fraud vendor may not be performing up to standards, and how should the organization address these issues before they escalate into a larger problem? So maybe if I start, Aaron, and I think know you'll have some input, as well. I mean, the easy early warning is if you're having fraud losses, go up. That means you definitely have a gap, in your current solution. But it could also be false positives. We've seen people try to tweak a current solution and either put in new rules, or the AI is not working as it needs to. So you get a lot of false positives. But I think, actual fraud losses is definitely the key indicator that the solution's not performing, but also just the, overhead and false positives could be another key indicator that it's not the right solution. But Aaron, I know you run into this a lot, so anything to add?
Another piece to add to this is if you do have your fraud risk appetite already designed and set up, and if you've implemented a vendor that's supposed to help solve a problem, but you're able to see the trend increasing faster than expected. And of course, that could be, is it related to actually more fraud, or is it more because the institution is growing? But also your solution should be able to alert you as well if there is some type of threshold being crossed. And you can set those rules up internally for your systems. But also another sign is if, honestly, I would say a lack of customer service. That customer success piece component is very important. If you're not getting the best return times on questions to your account reps, And especially if they say that they need multiple meetings to try to answer your questions in a timely manner, to me, that would be a bit of a red flag and a warning to look out for.
Super. I got a couple more. Hopefully, we can get to all of them. So one is, or the next one is, when you talk about ROI, do you include customer issues and how do you assign cost to it? So we all know reputational risk has to be part of your ROI, but Aaron, I think this is another good one for you on how do you include customer issues. It's a great question.
Absolutely. So if you're having too many alerts and you're getting more customer calls and complaints, you're able to include in your ROI the amount of time it takes from your operations group. So if it's your fraud investigators from your fraud operations function, you'll be able to look at their cost and how much time it's taking. And if they're not able to get to the true fraud alerts, if it's more of a customer complaints issue or it's blocking too many. So the time that's being spent in their hours, if they're at an hourly rate as an operations group, which I know many of them are, that's a part of your ROI as well, about removing the manual piece of it if something's could be decisioned automatically.
Okay. I think we might have time for one more. So another question is there a trend to combine AML and fraud organizations? Again, from my perspective, from what I'm seeing is we're definitely seeing a trend towards that. It seems to be a little driven by, organization size. But we've definitely seen a trend more and more for fraud and AML. There's a lot of synergies, but you also have to understand, what you're looking for on AML, versus fraud is two completely different things. So the skill sets you need to keep in mind, you can't assume an AML analyst is going to be a great fraud analyst. They might be, but what you're looking for could be two entirely different things. And I also kind of look at it, and I'm sure people have heard this before, sometimes your AML customers, can be your best customer until you find out, what they're doing, because they're not worried about, high fees and things like that. As soon as they find an organization that they can launder money, they're going to keep doing it. Fraud's completely different. A fraudster is going to try to steal from the bank. So they're actually your worst customers. So, but Aaron, anything to add to that one?
Yeah, just high level, just the AML piece is around all the controls and regulations around making sure that you don't open accounts to people to move illegal money into your organization. And your fraud risk function's goal is to make sure that there's not abnormal or deceptive information or access to move money out. And so it's two different beasts, but a lot of the combinations I think are driven that people look at fraud as just an expense, and it's kind of more manageable from a costly manner. Conceptually to move it with AML, but they should be completely separated from all organizations.
Okay. Thanks, Aaron. And I know we're at the bottom of the hour, so I probably got one of my favorite questions is, can we get a demo? So, next slide, we have our contact information. We'll also make this recording available, to everybody. I know a couple more questions came in. We'll try to reach out to those individuals specifically and give our thoughts on your questions. But I know we're at the bottom of the hour. Really appreciate it, not only on behalf of me, but Aaron, appreciate your time today. But thank you, everybody, and have a great rest of your Thursday. Or some of you, I think, are already into your Friday. So thanks again.
Thanks for having me.
Thank you,
Thank you,
everybody.
everybody.
Thank you.
Bye.
Bye.